What's up YouTube? This is The Working Investor, and today I'm going to share with you not only my gains but also my losses. And the reason why I'm excited about a loss is because I have learned something about it, and I hope to teach you guys not to make the same mistakes that I did. The case in point is Mara. This is a cryptocurrency Bitcoin mining company, and I got in at $54, and the current value is $35.54, which it appears that I have an unrealized loss of $1,846. You gotta stick to your criteria. You gotta stick to your criteria. You gotta stick to your criteria. My mistake was that I did not stick to my criteria. My criteria was something that I would not mind holding for a long time: blue chip dividend stock, positive financials, something that you're overall is bullish in it, and it's been proven to be bullish for over a period of many years, and ideally 1% a week premium. Did I listen to my own criteria? No. Was I greedy? Yes. I was seeking Mara because I was getting a 6% per week premium, and here you can see the numbers. I got assigned at $5,400. I do have potential to lose all that $5,400. However, I did get some premiums, so that offsets the maximum amount of money that I'm able to lose. So the maximum amount of premiums that I got was, my total amount of premium was $775. These are the calls and puts that I bought, and I sold one of them. So my new cost basis is not $5,400, but it's $4,625. So yes, I do have the potential of losing the entire $4,625. So long story short was I decided to cut my losses. I don't know what direction this stock is going to be in. A lot of people are really bullish in this stock. They really feel like the Bitcoin mining space has a lot of upside potential. I've seen some people saying that when it comes to Bitcoin mining, they have to renew their mining equipment every few years because they can't keep up with how much hash power you need. So some people are kind of not very optimistic. So what I did was I sold a long call coming out about a year and a half from now, a $70 strike, and I got a $1,280 premium right into my account today. So my maximum loss now is only $33.45, but my maximum gain would be $1,600 or 29%. I don't mind capping out my expenses at 29% in about a year and a half. So here you can see some of the trades. Here's my 1,280, and I could show you all my transactions if you're interested. That's what I bought, and then here's some premiums that I got. Here's a 250 premium, 220 premium, and this was a week prior, 110 and 115. So the question remains, where do I go from here? So the next company I'm looking into is Intel, ticker symbol INTC. The reason why I'm looking into this company is because it matches a lot more of my criteria. First of all, you can see here when I go on the chart max growth since December of 1984, you can see that it does have a positive upflow. So it's proven to be a bullish company. Secondly, it has a nice 2.15% dividend. Furthermore, something I did overlook in Mara, and I'm not going to overlook it now, is the financials. You got to always look at the financials, because how on earth do you expect yourself to be profitable if the company you are investing in themselves are operating at a loss? I want to have a company that's operating on a surplus. So going to the revenue, you can see that there's a total, I believe this is in thousands, so it's 77,867,000,000 is total revenue, and then there's a cost of the revenue and gross profit. But I typically like to look at the pre-tax income. So after all the stuff has been taken off, and what they're being taxed on is $25 billion in December of 2020, and you could see how the trend is going from 20 billion to 23 billion to 24 billion to 25 billion. You could see that they are making more and more money, so that is a good sign for me. Compare that to Mara, ticker symbol MARA. You can see that their total revenue is a lot more meager. It's only 4,357,000, and then the cost of the revenue is a lot more than that. So they're running on a deficit, not on a surplus. Look at their pre-tax income. Their pre-tax income is a deficit of $10 million. So that's a big no-no, and I should have listened to my gut, and I did not. Just one little pointer to mention for Intel is that Intel, obviously we all know the company, it's been around for decades. It is held in about 108 ETFs. So this is a company that's held both in the corporate and private sector. Now let's see if Intel meets the 1 to 2% rule. So typically you got your calls and you got your puts, and you'll notice, you could do your own research, and I've heard it from other YouTubers and I've tested it out and I've found this to be true, is that you tend to obtain more premiums on the puts than on the calls. People who own stocks usually would be willing to pay a little bit more, a prettier penny, to get some insurance on their downside. But you don't get as much premium on your calls. And I mean, I'm sure there are some exceptions, but typically I've noticed that to be the case. So when I evaluate the 1 to 2% rule, am I getting 1 to 2% premium of the value per week? I look at the call side to be more on the conservative side. So let's say hypothetically you buy in at 63.5. Oh, it just turned dark. It's after hours now, guys. And then I always go up a couple strike prices, so you don't mind selling a covered call at 65 or 60. So you could see that the premium you would obtain would be $1.17. So 1% would be 65 cents, 2% would be $1.30. So this is close to 2%. It's 1 to 2%, even a couple of strike prices up. And I can even prove it to you if you go to the put side, you'll see the premiums are higher. So when I go in, I typically go into a wheel strategy with a put. And with the puts, you'll see that you got $1.25, that's about 2%, $1.48, $1.71. So you do see overall higher premiums. But again, I believe that this has all the fundamentals that I am looking for. Once again, do not make the same mistake that I did. If you found any value in this video, please give me a thumbs up, like, and subscribe. I will try to get some more videos out to you soon. And hopefully we have some positive gains coming in the near future.